Welcome to Scoop Podcast, and I'm John.
And I'm Annette. Today we are doing something a little different, a debrief of the launch performance of Skye at Holland. We'll walk through what the numbers tell us, what we have learned from the demand, and how this matters to you if you're on the search for the next sellout launch.
We have structured our post-launch review into 6 parts. Using real transaction numbers and take-up data, we will connect what happened at the launch to broader market trends and what that means for you as a next move as a buyer. Here we go.
Skye at Holland sits along 2 and 6 Holland Drive, right in the heart of the Holland Village area in District 10. It has 2 towers of 40-storey blocks with 666 units, targeted TOP date around 2029. It is a leasehold and a 9-year condo with the tenure starting from 19 August 2024. So, by the time owners get their keys, there will be around 94 years left on the lease.
Not too bad. The development will be the tallest in the neighborhood with 2 towers of 40 stories elevated above 20 meters. About 7-story high, So it's sitting on top of 2-story car park podium and a landscape deck.
So basically, you're paying for a 2nd floor unit but living on 8th floor. Not a bad deal at all, we say. The towers are oriented in a northwest-southeast direction with at least 2/3 of the units facing unblocked views. Northwest-facing units will overlook the good class bungalow areas of Holland Rise, Weetongham Park and Queen Astrid Park. Southeast-facing will enjoy panoramic city views and high-floor units will get a view of MBS.
Wow, atas, man. Importantly, the project sits on a mature estate with 1 Holland Village Mall just downstairs. 5 minutes walk to Holland MRT. Henry Park is within 2-kilometer radius and surrounded by established private residential properties.
Yes, and the developers are UOL, Capital Land, Singland and King Leong. This brings credibility which matters when buyers are assessing how well it will be built up eventually.
Now the headline numbers. Launch weekend on 11 October 2025, Skye At Holland sold 658 units out of 666. This translates to a take-up rate of 98.8%. Buyers were mainly Singaporeans and permanent residents. The average price achieved was around 2,953 PSF.
So let's break down by unit types for clarity's sake. 2 bedrooms about 581 square feet starting from 2,598 PSF or 1.51 million. 3 bedrooms about 915 square feet starting from 2,623 PSF or 2.4 million, and 4 bedrooms at 1,238 square feet with private lift from 2,698 PSF or 3.34 million. You might have noticed that there weren't any 1 bedrooms on offer. Clearly, developers were targeting families and own-stay upgraders rather than investors. So in summary, it had an extremely strong take-up rate and strategic pricing for a CCR project in 2025. Many analysts call it one of the strongest CCR new launches performances so far this year.
Several factors behind the strong launch. 1. Location and scarcity. Holland Village is already so packed, right? That every corner's got cafe, every turn you see a condo, landed house. Basically not much empty land left already. So when there's a new land parcel actually comes up, wow, really gets everyone's attention. The last time that this happened was Holland Drive GLS site, released in the first half of 2024. That one, people say the last spot of land available in private residential development in Holland V. Then, now, boom, something like that happened in the market. Pent-up demand is huge because chances to buy don't come often.
Second, pricing strategy. Actually, the entry quantum for Skye is actually pretty competitive if you think about it. If you compare it to 1 Holland Village, which is next door, it's also a 99-year leasehold project. 1 Holland Village is currently transacting around 2.7 to 3K PSF. Their smallest 2-bedder is about 689 square feet. And so even if we take the lower end of 2.7K PSF, you're already looking at a price of roughly 1.86 million. When you put that side by side, Skye's pricing definitely came in quite attractively for buyers who want to be in the same Holland Village neighborhood.
Number 3, reputable developers and execution risk. The developers behind Skye At Holland have a solid track record. We have Conquest Band 1 developer, UOL, together with Capital Land Development, Singland and King Leong. So FYI, Conquest Bank is a grading framework on developers building workmanship done by BCA. 1 being the best, 5 being the absolute no-go. So they are known for building homes that not only look good but also last. You can feel the quality when you walk into their past show flats project. So that definitely gives buyers a lot more confidence to buy it. They know it's not just some marketing gimmick talk because the end product sure solid.
So overall, Skye at Holland's performance really says a lot. Demand came both from upgraders, those selling their $1 million HDBs or older condos nearby, and first-time home buyers who saw the Holland address as a smart, safe play. So it's not all just hype, but a mix of buyers who made it sustainable. And when you see almost 99% of the units being snapped up, it's a strong sign that the project really hit all the right notes.
Yeah, with today's lower interest rate, buyers are putting money back into quality development as long as the pricing makes sense, and the product fits what people actually want, good projects like this will always find their demand.
So let's talk about rental demand. For similar CCR condos, 2-bedroom units are renting for about $7.50 PSF a month. That's the benchmark we'll be using here.
Just for illustration purposes, say you purchase a 2-bedroom at 2,598 PSF for 581 square feet, so the cost will be 1.509 million. If rent is at 750 PSF at 581 square feet, the rent per month with 4,004 equates to 53k per year. That gives an estimated gross of rental yield 3.5%. After cost, maintenance, property tax, vacancy, buffer, the estimated net yield might be around 3%.
Take note for investors, this is not about high cash flow. It is about stable rental return and capital upside. If you are looking at a cash flow play, you might be better off considering another property type such as commercial properties.
True that, an estimated net rental yield of 3% in a prime address with strong demand and scarcity isn't such a bad thing if you're looking to rent it out straight. Again, the emphasis on yield plus location rather than high yield only.
Okay, so John, for anyone buying right now, what do you think is the exit plan that makes the most sense? For me, I think there are two typical profiles here. If you're buying to stay, then just plan to hold for around 10 years. Over that kind of horizon, you will usually benefit from the time value of your purchase, plus enjoy the lifestyle perks of living in such a prime location. But if you're buying as an investor, the strategy is a bit different. Plan for maybe a 5 to 7 year kind of hold, and once you get your keys, rent it out straight away and let the rental income help cover your mortgage while you wait for future resale transactions to set new benchmarks before offloading the property.
Yes, exactly. Considering where the prices are right now compared to other nearby launches like 1HV, its broader average PSF range is between 2003 to 3008 PSF depending on condo class, unit size, and floor. This one, Skye, came in at pretty competitive quantum. So if say 5 to 7 years down the road, a 3-bedder might start to transact at average 3,200 PSF, for example, this will definitely be a tidy upside for anyone who bought early and held through.
So what does the success at Skye at Holland tell us about the wider market and how should we advise our clients? Well, a strong launch like this shows that there's renewed confidence in the CCR launches, but only when location, product and pricing all line up together. And also, entry quantum matters just as much, if not more than the PSF value, especially in these higher price markets. And the whole leasehold versus freehold debate, this proves that leasehold can still perform really well, especially if the factors are all right.
Yeah, so whenever you're thinking to buy into a project, you can use our 5 points framework here as our checklist to determine whether a particular project is worth considering. You know what? Better still, contact us. We will do all the heavy lifting and analysis for you. One more thing to know, successful launches often allocate units strategically between owner-occupied and investors. That keeps buyer profile healthy, which in turn helps maintain strong transaction volumes and supports the value of the development when it's time to exit.
Alright, just to sum up, Skye at Holland really stands out because it ticks so many boxes: location, product, pricing, and demand. It is not just a credible entry into a prime address, but it has definitely showed us a blueprint for how new launches can succeed in 2026.
Exactly. If you're looking at projects in Holland Village or other CCR launches, don't just focus on PSF. Instead, consider whether the total quantum is still reasonable and whether the project benefits from real scarcity, because these two factors drive long-term value. And hey, if there's any condo launch that you've been curious about, drop us a message and we are happy to break it down for you.
Thanks for tuning in to The Scoop Podcast with John and Annette. Catch you next time. Bye!